Investors and traders, welcome to the channel. Today is 8th of August 2024. Hope everyone is having a great day. So we'll be taking a look at the key US stock markets in this video segment. As always, this video is for educational purposes only and it is not a financial advice. So we will actually start by taking a look at the US dollar. So here we go. And this is the daily chart for the US dollar as mentioned in the previous video. It has actually completed our ABCD, which is this black lines here, and it went right into this box that we have drawn and is finding some support here but remains weak, so the chances are it's actually going to come and challenge these lows one more time and possibly test the 78.6% retracement around 101.60. And after that we'll have to wait and see whether further weakness come into the US dollar, but it's just a trading range behavior. What we have seen thus far is a little bit of a rally. It's a few days rally, and here we go. Let me show you the market symmetry here. So there we go. This is how much the rally was on the previous occasions. So if we begin to get something a little bit more, then that means there is additional strength coming into the market. In terms of the retracement, here we go. It just went pretty much to the 38.2% retracement of this swing and of the smaller one. Here we go. It went to about 50%. So we had a confluence of two of these ratios come together along with the symmetry, and this is why we think that this is a strong resistance level. But it can go a little bit higher intraday, especially around 103.55, which is 61.8% retracement. But the rallies are likely to actually find stiff resistance in that region. Remains range bound. Now, if you look at the yields, so we start by taking a look at the shorter end of the curve. This is the 2-year Treasury note. It met our target of ABCD right to the 3.9%, and in fact went lower, but then closed on the 5th of August a little bit higher. So it's really amazing to see how these patterns actually work, because we were forecasting this 3.9% a long time ago, a few months ago, so long-time subscribers to the channel will know. And at that point, it looked quite unlikely, but this is the power of the patterns, and especially the one-to-one projections, which we like to label as ABCD. So now the question is, what is next? So after reaching our target, and in fact going a little bit beyond that, it's moved into this zone, which is this gap. So thus far it has only tested this, but there's a possibility it can come and actually fill this gap around here, at least towards the middle of it, so around 3.6%. But our expectation was that the yields were actually going to rise, and this is what we are seeing. The yields have risen, and the 38.2% retracement on the entire swing comes around the 4.18%, and that's the kind of the zone this market is likely to enter into. And if we were to use a smaller swing, here we go. So we also have the 61.8% retracement come around the 4.2%. So that's kind of the zone we are looking at. 4.18 to 4.25, 4.3% is where we have some resistance sitting for this market. If it is able to get above the 38.2%, then we have this, oops, let me actually get this one back. I wanted this line, this acting as a fulcrum. So it should find a pretty stiff resistance around the 4.5% mark. But we have seen over the course of past the 4 trading days, the yields have risen, and that is something we are seeing across the board. So now we'll take a look at the 10-year Treasury note. Here we go. So this market actually completed this on the daily chart. It completed this one-to-one projection ABCD right to the tick, and also the 1.272 expansion of the BC swing. So it's got a pretty strong resistance level right there towards the top of this trading range, and this is what we have seen that in the last 4 trading days the market actually pulled back a lot. So it's just gone down by about 3 points, which is quite a lot. And if we were to just take a look at from a symmetry perspective, um, that the previous correction, the bigger one in this CD leg was about this much, and I think we might have actually done that already. So here we go. So we have completed this, and this is what we are seeing, that perhaps we are likely to see some strength coming in the market now to the upside, but the 38.2% retracement calls a little bit lower around the 112 region. This is what this red line is indicating. So between where we are now in this 1 points range, excuse me, we are likely to see some support gradually build up, and tomorrow being a Friday, will be interesting to see how the market will close for the week. Now, if we take a look at the long bond futures, which is the symbol ZB, it has actually completed its 38.2% retracement of this swing. Let me actually try drawing the swing for you. Here we go. This is the one I'm talking about. I'm going to delete it now. So this is a really interesting development. That could influence the 10-year note as well. So if this one is still in the CD leg on the daily chart, so we have higher targets, and especially after completing the 38.2% retracement, it could have a trading range day on Friday. If we look at TLT, which is the iShares ETF for 20 plus year durations bonds, it's very similar to the long bond futures charts. The CD leg is much higher, and it appears to have actually completed its 38.2% retracement, maybe a little bit more. Yeah, there we go. So right at the 38.2% retracement, this is where it closed slightly above. So that's a good sign. So maybe we might begin to see some selling pressure abate in the rates markets. Gold. So the gold is really, really interesting. The daily chart of gold, we saw a really nice strength come into the gold market, which is really good to see, because ever since the sell-off started, we have seen gold actually kind of go sideways, and since 2nd of August actually come under a fair amount of pressure. And in my opinion, that's because of the liquidation kind of event that we have seen, where perhaps the speculative players that need to raise money, they might be skirting off their positions to buy new things, or basically close some of their other trades, because now they have to, such as the carry trades positions they were running. So we have seen the pressure come into the gold market, but the gold has actually been fairly resilient. But what is surprising to some extent is that the dollar has been weaker as well. So with the dollar being this weak, I would have expected the gold to be much higher. It is not, and I think now it's kind of starting its move, especially because the stock market, in my opinion, is easing up. The selling pressure is easing up. So I think the gold and the stocks will begin to move kind of in tandem now. So if the stocks are moving higher, so risk on, I think we are more likely to see the gold actually move higher as well, and vice versa. If some pressure come into the stocks, then the gold could actually be sideways to a little bit down, but the gold has been pretty resilient, and we do have higher targets for gold as well. 2500 is the kind of the medium term target we were looking for. So we did achieve that. We can actually go and hit this 2570, and then on the monthly chart we have even higher targets. All right, so now let's start by taking a look into the stock indices. So excuse me. Now what we are looking at is the daily chart of the S&P 500 cash index. Look at this big completion of the ABCD price pattern. It has held, and today was a good day because we closed higher. Yesterday we had strong resistance coming from the 38.2% retracement of this entire move from high to low. So it's really key that I think one of the things we discussed yesterday was that the market actually came down to test these lows. I think we are going to see more of a trading range behavior But if we begin to close above this 53.27, that's really encouraging, because that would mean that the market is able to get above the 38.2% retracement. And if the market was really bearish, then we would have seen sharp moves to the downside. And if that that kind of scenario doesn't materialize, then that's adding more to the idea that we might have actually seen a pretty good bottom. A little bit early to confirm that. And what I really think is likely to happen is that the market is actually going to remain in this big trading range for quite some time, and maybe we begin to move out of it to the upside. In fact, quite likely, it's maybe later in the year, but for at least the month of August, maybe till September, we might remain quite a big trading range. So you see this gap around here that I've drawn as 56.25 to around 56.40, 41 level. I think the market is likely to go and actually fill that gap, whether it'll be able to make a new high, or whether it just then rotates all the way back to the bottom of this range and test the 5th of August lows one more time, maybe even go slightly lower and just complete its corrective pattern. Remains to be seen, but that's the kind of scenario I think is more likely to play more of a trading range behavior. And also another interesting thing to watch is that we do have another gap right here. If we take this and this, so actually let me share this area. So this to this. So that's, actually, it's not like this. It's like this. So market is likely to also fill this one and maybe find some sort of resistance there. It might just go sideways to a slightly lower from this region, and then probably go back and fill this gap. So that is the possibility I think the market is more likely to do. Now, if this low of 5th of August is broken to the downside, then that's a pretty negative scenario, and then the market could actually cascade much lower. And in that scenario, what we could actually look at is something like this, assuming that this is our point C high. So the market actually cascading all the way down to 47.70. So I'm gonna actually remove this right now, because for this we need the 5th of August low to be broken to the downside. But this is the kind of thing we'll have to evaluate, and then of course the point C is not confirmed yet, but once it's broken, we'll have the point C available to us as well from the projection. Now if we take a look at the S&P 500 futures chart, we have the same pattern formation, but look at the action in the futures. So here the futures were up by 150 points. Yesterday the futures were down by quite a lot as well, so it's not giving me the entire range. Was showing minus 46.75, but if we just look at the entire range, just visually, it was also down by about 150 points, and then rallied today by 150 points. So that's the kind of volatility that we are dealing with. Really important now, with the market pretty much closed for the past closed today, but the high of yesterday as well. Is this 53.60 level. That's the 38.2% retracement of this entire swing, highs to lows, and 50% from point C to D. So we have a confluence of two things coming, so which means that there's a stronger resistance level, and this is why we saw yesterday the market actually sharply move lower once it hit these levels, strong resistance levels, and tried to actually test the lows of 5th of August, and then we have seen a reversal today. Now, really important, if the market is able to actually rally tomorrow as well, then that would be pretty positive. Well, it's going to be very positive, because that will be breaking the 38.2% and the strong resistance level. So that will show that the strength is coming into the market, the buying is coming into the market. And then again, as I showed you on the cash chart, that gap, which is right around here, this region is probably what the market is likely going to test the top part of the range. Now let's take a look at the NASDAQ 100. So we'll start by taking a look at the NQ. This is the daily chart of the futures. Here again, so this is the interesting thing that about bottoms. When the bottoms are formed, then they are kind of formed in unison. So the major indices, two or three major indices, they'll be forming bottoms together, or you will find key patterns such as this one-to-one price projection ABCD being there, or these markets hitting a certain really important Fibonacci ratios, retracement ratios such as 61.8%, 78.6% retracement in kind of unison. So this is like how the bottoms are usually formed. They are formed in unison, whereas the tops, we have seen one index to one thing, another index to another thing. So the tops could be formed at different times, but usually the bottoms are kind of formed in unison. And the selling pressure when it comes, fear being a greater emotion, everything is kind of goes on sale, and then something happens, and then the buying begins to come in, and the buying comes in and everything. So this is, in my opinion, why we see bottoms formed in unison. So we have the same one-to-one projection ABCD in blue. I've just not labeled it. Maybe later on I will. So here we have seen a really nice rally today in the NASDAQ 100 index in the futures, 703 points. Yesterday the market was also down. If we just take the entire range, about 700. So a reversal of that. Fantastic day. Really a really key thing to note, which is a big improvement over the price sections of yesterday, is that the market has closed above 18,250, because that was the 30 leg, this blue leg right here, this one. So the bigger 38.2% with the structural resistance come around 18,740. If the market is able to get above that on closing basis, that shows to me that there is actually buying strength coming into the market. Trading range behavior to be expected around this level, so we might see some sort of whipsaw around this level, and then finally I think if the market make another attempt to come down, try to take the 5th of August lows out, and if it fails, or if it is able to do that by just a tiny margin, but it closes higher, then it'll be further strengthening our view that we might have seen a pretty important bottom 5th of August, and then maybe towards the later end of the year we could see a pretty decent performance from the stock indices. Now let's take a quick look at the Dow Jones through the eyes of the Dow Jones E-mini. Here we go. We have similar pattern, 1.618 expansion of the CD leg. This is the extension of it. So again, goes back to the same concept that bottoms are formed in unison. So this is why I'm paying a lot of attention to this, because I'm seeing this happen in the S&P 500, whether you look at the cash index or the futures. Then when we look at the NASDAQ 100, whether the cash NDX index or the NASDAQ 100 NQ futures, we see the same thing. And then on the Dow Jones futures, we have this pattern, a really important pattern being there, and the Dow actually rallied 837 points today. So let me draw something similar to what we have seen in terms of retracement, and here we go. So you see on 5th of August, well, actually just right above that, we have this around 39,750, the 38.2% retracement. If the market is able to get above that, that will be a pretty good sign for this index. Russell 2000, let's take a look at the small caps. The small caps also rallied about 60 points, which is quite a lot. This index is actually weaker, and we were expecting, at least on the daily chart, for it to go up to 2365, but it found really strong resistance from the 1.618 expansion of this range, and it just fell right into this gap formation. And in fact, let's take a look at the entire retracement. I think it's done. It's 78.6% retracement. Here we go. Yep, this is where it exactly went. So this is it's a slightly different pattern formation. We don't have that ABCD here just the way we have it in Dow Jones or the NASDAQ or the S&P 500. We don't, but what we have is basically a 78.6% retracement around the 2003 mark and the 200-day moving average, and both of them have been held so far. Last but not least, we'll take a look at the New York Stock Exchange Composite Index, because this one has about 2,000 plus stocks, including the ADRs. So it's just also representative of a fairly broad um, kind of mix for the stocks. So you could also kind of view it as a breadth for the stocks as well, in a different way, not in a traditional way. And this one also did the 78.6% retracement just from the, yeah, there we go. So that has been held. Pretty good day for it today, up by 347 points. So if the market begins to close below this 78.6% retracement, that's going to be pretty weak. And we still, the price is above the 200-day moving average, so that's another positive as well. So really watching this one carefully as well. And then let's take a look at the international markets. So we'll start by taking a look at the FTSE 100s. FTSE 100 is also doing something really interesting, because we have this ABCD pattern in the FTSE 100 as well, and this is this red shaded red lines, they show that. But I think we had the 1.272 expansion of this in the Great Britain. So here we go. So here 1.272 extension, and we have seen the 1.618 extension of the AB, and then the CD leg expand by 1.618 of the AB in the US indices such as NASDAQ and S&P 500, 1.272 in the Great Britain. And from a retracement perspective, it's let me actually take this retracement all the way right here. So 38.2% is being respected. So good amount of support in the FTSE 100 as well. Then let's take a look at the German DAX. Here we go. So the German DAX is really interesting as well, because what we see is we have a 38.2% retracement of the October 2023 lows. And then we also have the market symmetry available. This green line you see. So this is your entire bear market of 2023 during that period from July till October 2023. Well, I shouldn't call it a bear market, but it was the corrective move. And then what we have done now is we have actually got this perfect market symmetry. We have actually completed the equal move. So it's another point to note that 5th of August might have been a pretty important date, and we might have seen more and more evidence till the 5th of August low is broken to the downside, that that is a good amount of support. Now, as I mentioned, if the 5th of August low is taken to the downside, then our scenarios will begin to change, and the pattern formations will change, and we'll update you accordingly. But for now, this is what we are looking at. I think the markets will remain volatile. The markets will move more in a trading range fashion, and we have come up with certain targets, certain gaps that could more likely to be filled. So this is what we are looking at in the key US stock indices and markets in the US, and the stock indices in the Great Britain and in the Germany as well. So thank you very much for watching the video, and if you like the video, our technical analysis, please like the video. If you like how we do the technical analysis on the channel here, and please do subscribe to the channel, and if you do, then hit that bell icon button. That way you will know when the new videos are posted. So again, thank you for watching the video. Good luck, good trading, and speak to you guys soon.